Welcome to the Sydney Property Muppets podcast. My name is Kurt Lawther. I'm the real estate agent, and with me forever is
Chris Clark, the buyer's agent. Now, we'll mark out the elephant in the room. He's not exactly an elephant. Who do we have here today? No.
Hi everyone, my name is James Leader. I'm from England initially, but I've been here for 6 years. I work for a company called Shore Financial. We're the largest independent brokerage in Australia. I'm here to chat to these guys about all things finance.
Brokerage, so all things mortgage broker.
Yes, sorry, correct.
No, that's all good. That's good.
I mean, we do asset finance as well. But
there we go.
just a great bloke in general, and we thought we'd have another guest on. You're the second guest, so
brilliant, thank you.
You're high up there.
At least you said yes.
Yes. But in talking about niches today, guys, some niche banking policies, Chris, and we wanted to get James on here because we take for granted what is out there in the real estate industry and borrowing money and what you can do. However, we wanted to break it down, some interesting niche banking policies.
Well, I think also, look, we get asked, as a real estate agent buyers, and we get asked these questions from time to time. Now, what we know is property. We know what it's worth, how to sell it and how to buy. But we get asked questions about people's loans and situations that we don't know. So this will be a great episode in terms of some of those. And we're going to kick it off. We're going to talk about LMI. We're going to talk about some low docs. We're going to talk some government sort of incentives as well. In terms, James, explain to us what it is and who's using it.
So LMI is typically payable. It's a premium that the banks pass on to the borrower, rather selfishly, but that's the nature of banks. When you have less than a 20% deposit, there's exceptions to the rule, and we're going to discuss that. But typically, if you have less than a 20% deposit, you have to pay LMI.
Yep.
This gets added to the loan at settlement, so it's not an upfront cost, but it's really best to avoid it if you can, because it can be quite a lot. I mean, it can be up to, for example, a $500,000 property. If you're borrowing 90% of that, so what's that, $450,000? LMI is about $7,000, so it's fairly substantial, and it's best to avoid if you can.
Of course, it's best to avoid. Does it frustrate you, just going off a bit of a tangent here, the newspapers and media always talk about 20% as if it's like it's concrete.
Hard and fast rule. Yeah, agreed.
It's not, but
it's not,
I get why they say it to some degree, but...
Well, it's one of the reasons why I wanted James on here to talk about this, because I wanted to have more of a positive spin. Because people talk about how hard it is to get in the market. You need 20%, but there's other ways around it. And I think it's better off, if you only had 10% of a 10% deposit, still getting into the market, paying a little bit up front for LMI.
Yeah.
Because if you hold on to that asset for another 5-10 years, I feel you're going to make it was worth it paying a little bit of LMI.
I mean,
depending obviously how much you borrow.
I mean, typically you do have to pay LMI if you've got less than a 20% and you're not a first-time buyer. But that's not. There's definitely ways around it. So, first of all, if you're a first-time buyer, you can avoid paying LMI. But there's a few criteria. So, the purchase price goes up to $900,000.
So it's capped at 900,000.
It's capped at 900,000.
Okay, so I thought it was 800,000.
No, it's 900. I think they made changes in FY24. It's now 900. I can't remember what FY23 was, but it's definitely 900 now. It's actually less than 900 in rural areas. I think it goes up to 750 in regional NSW, but metropolitan, like city centres, 900.
Okay.
Is there a concession after that to $1 million?
There's a stamp duty concession, which is
stamp
something you might be
duty.
confusing.
Yeah.
So up to 800,000, there's no stamp duty payable.
Yep. For first-time buyers.
For first-time buyers, sorry. But between 800 and $1 million, there's a sliding scale.
Yeah.
There's a concession.
That's right.
Right?
So you can get. So if you buy under 800,000, you can be in 2 weeks. You can be paying no LMI.
And no
stamp duty.
exactly.
So it becomes quite attractive.
Yes, exactly.
You talked about how it's applicable for first-home buyers, or there is sort of loophole there. What other groups? Is there any other loopholes to avoid paying LMI?
Yeah. So if you're certain lenders, typically the major banks, and a few others, they waive LMI for doctors, accountants, lawyers. I think that's it.
So those clusters.
Yeah.
Yeah.
Because they're typically very reliable jobs. There's not going to be a shortage of demand for those workers.
And decent.
I was going to say.
Yeah.
Interesting miners on them. Maybe the stability of miners, because obviously they can fly and can earn a lot of money, but maybe the stability.
That's probably why they're not included. Exactly.
Okay.
But yeah, it's a really useful tool because stamp duty is usually the biggest impingement for. It's the biggest barrier to entry for first-time buyers, and if that can be waived, then obviously it's great.
Well, I was just going to say something else we were talking a bit off air, and one thing it's very to note is real estate agents can give a professional advice on real estate, what we were speaking before, the same with buyers agents. However, we're not allowed to give tax advice, professional tax advice, and it's very similar with lending. I try to avoid giving any specific.
Yeah, I definitely can't give tax advice.
Generic advice. However, mortgage broking, that's why I think it's very important to have a mortgage broker up your sleeve, because they're the ones that are going to be able to answer the specific regarding the laws, the policies. And there was a word you mentioned before, low doc. If someone heard the low doc, I think most people wouldn't really know what low doc even means in the mortgage broking.
Yeah.
So explain.
So low doc loans.
It means when a boat docks really low.
That's right.
So I had to jump in there. Sorry, James.
No, not at all. So low doc loans are loans which aren't regulated in the same way that conventional loans are. So loans offered, more competitive loans offered at lower rates are regulated in different ways. So, which means that there's a lot less. There's far fewer barriers on low doc loans, which means you can borrow a lot more and supply much less evidence to get the loan approved.
So everyone should just apply for a low doc?
Good question, sir. I'm not explaining that well.
No, you are doing well.
So
I'm
here. Yeah, no. So it's good. So there are definitely best to avoid low doc if you can. The rates are much higher because you can borrow so much more by giving such far fewer bits of information. It means the bank can charge you a lot more, and they also charge what's called a risk fee typically, which can be quite hefty.
Is that paid up front?
It's in the same way as LMI. It's capitalised onto the loan.
Okay.
So, you don't have to come up with the cash, but obviously you don't want to go to a low. People only go to low docs if they have to.
So quick question: you got a first-time buyer. And they want to buy an $800,000 to $1 million property. What's the lowest deposit they could have, and just say they're on an average income of maybe just call it $80,000?
It's a lot of math to go on.
Yeah, I'm trying. Well, to 5% would be up to 90. So you can, for first-time buyers, is what you asked. First-time buyers, you can buy up to 900,000 with a 5%. That means you only need $45,000 in cash. You'd need stamp duty as well, which would be slightly discounted at 900. I think it'd be around 26,000.
Yeah. That's our job to know.
Yeah. No. So you need around 75k to purchase for 900,000, which is pretty significant. As in, it's a pretty good deal, to be honest.
And you're saying you're about to lead into the deal you've done recently, low docs wise?
Before you really interrupted.
I noticed that.
I know. Jesus.
Can't help himself.
I can't.
Real estate agents.
So I did a deal recently where there was a very high income earner. He works in the financial markets, but it's a fairly new company. But it's taken off quite well in the past few years. But he hasn't done his FY24. His FY23 tax return showed a loss because the company was still in a growth phase. FY24 is a completely different story. He's making an absolute fortune, but he doesn't have the tax returns in place. All he does have is BAS, so business activity statements.
Yep.
He's
so
not
quarterly reports.
Yeah, so he's not going to have his tax returns until January, but most banks require those tax returns now. However, the low doc lender we went with was happy to fund the loan, providing we could provide either an accountant's letter or the business activity statements. He was able to borrow $3.5 million. He did have to pay a risk fee of around $45,000, which I think is around 1.5%. But again, that gets capitalised onto the loan. I mean, it was that, or he lost the property because he actually purchased without an approval and then came to us.
Wow! Watch previous episodes on what not to do.
Yeah.
Definitely covered that up before.
A few sleepless nights, but we got that.
That's good. Sorry.
Yeah.
Bad, so I shouldn't laugh.
No, exactly. Yeah.
Things
We can laugh because he got it.
He got it.
Yeah. But he stood to lose. It was a $4 million property, so he stood to lose $400,000.
Yeah. 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 Right. Okay.
So taking a little bit of a loss, but for the long-term gain.
And also, one thing to add. The reason why the rates are so much higher with low doc loans, among other things, is that they know that people aren't going to be on them for that long. You'd be mad to stay with a low doc lender if you didn't have to. So with this particular client, as soon as he's got his tax returns in January, he'll have every single bank desperate for his money for that loan because he'll be able to service it incredibly easily. So we'll refinance from the low doc lender to a more mainstream lender on a more competitive rate. So he'll be with it for 5 months.
Yeah, right.
And there's no risk, there's no penalty for leaving because he's on a variable rate.
I mean, it makes a lot of sense. I just never thought about it in those ways. In terms of going, okay, because I do go, okay, Ludoc is going to have a higher rate. That's going to stimulate. My mind defaults to it's 2 or 3 years. You've got to deal with it. But as you're saying there, that one example, I know it's not everything, but 5 months, I could probably deal with the pay for 5 months to then move off and have a much more comfortable rate or better rate overall. So
I think that just moves perfectly into our 3 quick
do you want
cues.
to go government stuff first? Or just quickly on the government initiatives?
Yes.
Okay.
I mean, we've sort of brushed over them, really.
Keep going.
The main one is the first home guarantee scheme. So allows you to purchase up to 900,000 with only a 5% deposit and no LMI is payable. The criteria is that you have to be a person over 18. You used to have to be an Australian citizen, but you can now be a permanent resident, so that includes me, which is great.
Congratulations.
No.
Because they want your money.
Thanks. And then, but I mean, there are a few. It does rule out a few people in that if you're a single person, the maximum taxable income for the previous financial year can't exceed $125,000. So it's a decent amount, but it's not huge. If you're in a couple, if there's 2 of you, the combined taxable income can't exceed $200,000.
Okay.
Or you also can't buy a commercial property; it has to be residential.
Okay.
But you can buy vacant land. It can be units.
Anything sort of residential focused.
Yes. Yeah.
Classified.
Um,
I just want to click back. There's one question I thought about earlier, and just before I go to the 3 quick questions. So LMI, I definitely had a belief that it impacts your credit rating each time you went through to get your pre-approval. Not LMI, sorry. Your pre-approval
applications, pre-approval applications.
Yeah, I always thought the pre-approval was they went and check your credit score. So each time you did that, affect your credit score, but that's not the case.
Yeah, so common misconception. It doesn't have any adverse effect on your credit score. It has an effect with if you were to submit 5 pre-approval applications in a month, which you just wouldn't do. But if you did, it could have an issue. You could have an issue with the bank. Yeah, why are you submitting so many? But it doesn't have an impact on your actual.
So that wouldn't affect
score.
the credit score. That would affect the bank's view of you.
Correct. Yeah.
Right.
Yeah. Declines, if you have several declines, that can affect your credit score, but just lodging an application for a pre-approval doesn't.
Right. All right. Very good. Thank you. So I just wanted to
No, it's good to know.
So quick question. So it's all going to be focused on you, James. So get ready.
Yeah.
So you're under the blowtorch.
And also, you can't expand on your answer.
Oh, we didn't tell you this part.
We didn't tell you
it's
this
not
one.
a yes and no.
So
Yes and no are very short. You can't.
Yes and no. Very one sentence.
One word if you can. You
Um,
probably can't with mine.
and probably neither with mine. What is the largest loan you've ever lent?
I was expecting much worse than that.
Wait for it.
Yeah.
That's the first question.
Probably people have done much larger. Probably about 8.5 million.
8.5 million.
Yeah.
Pretty freaking sizable.
Yeah, it's still pretty sizable. I would. Yeah.
It gets dwarfed though.
Not to be sniffed at.
Slightly
in the
desensitized though.
In the team, it gets dwarfed. I imagine.
Yeah. I mean, I do mostly residential stuff. There's a few commercial loans for
I can imagine.
flying about, which are much higher.
Multiplies that. Now I've got effectively 3 questions in one, but it's
Go
going
on.
to be easy for you. So
Bring it on.
obviously you said you're not born and bred in Australia. So when did you come here? Why did you come here? And why have you stayed?
Oh, lovely. God, guys, I was expecting so much work.
Well,
You had your chance and you blew it.
No.
I came here and
As you know from watching the series, this is basically how it always is.
Okay.
You know that because you're an avid follower.
You're watching every single second.
I know. I love the one you did in October 23. I came here 6 years ago. I came here in 2018.
Yep.
Came with a friend called Adam
Yep.
Long. He's since left.
Bugger
Cheers,
off.
Adam.
Weak.
Weak man. We came here in 2018 together. We finished uni and we just thought we'd try Australia out.
Why'd you stay?
I found Shore Financial.
Oh!
It was an irresistible temptation, and I've stayed there ever since. It's been no, seriously. I've been.
You've been there since
I've been there since more or less since I came here.
Yeah,
which
that's
is
right,
a
I
few
saw
months
that, yeah.
after.
Nice one. Last
So
question.
you're a loyal man.
Yeah, I don't think so.
What
Loyal to the podcast.
What is the most bizarre request or thing that someone has ever done to you?
Ever done? Not
Not
loan-wise?
loan.
No, just anything. You said it was too easy, so I've opened it up from banking to just...
Bizarre request.
You should just go with what's your most embarrassing story.
Don't talk about Thailand. Don't talk.
Lady boy.
I can't. Sorry, I'm trying to think. I've had a few people lending wise, I'll be boring and stick to mortgage broking, but I've had a few people want loans using like ex-partner's income.
Oh, right.
I've had one person do that, but I think they were.
Yeah, I'm not 100% there.
Yeah.
All right, let's move on to brush off because we're going to get in trouble here. So, thank you for coming. We're going to do a few of these episodes with James, so we're looking forward to those. This one's on, as we said, niche banking policies, but looking for the next one.
And if you've managed to take something out of it, or you know someone that would really
See value, yeah.
Thank you for helping with
Should
English.
be yours on.
Just one person, massively help. Like, subscribe, follow, comment, positive, negative. We love the negative, so.
We don't. Look, positive. 5 stars.
All right, get the comment.
Thanks for dropping by.
Thank you. Cheers.